Ryan, Senior Trader of ProfessionalStockTraderLive.com, as well as co-founder, bringing you Wednesday evening's technical analysis update for January 21st. And we're going to start off by looking at the bond index, which is the 30-year bond. And we're looking at the futures on it. And you can see here how it's looking like it's starting to break down here. And it's just starting to slightly break below the white line here, which is its 50-day moving average. And we think that's a telltale of things to come. Now, we're not quite sure if that means the market is getting ready to rally, or if that just simply means that the rush into bonds is over and that there is no real play left in being long the bonds because the yields are so low. So we're not quite sure what to totally read into that, but we do know that we are going to look to play in the future the TBT, Tomboy Tom, which is a way of playing the ETFs, which is bearish on the bond market, which we are turning bearish on the bond market now. So if we can get any bounce back up towards the 20-day moving average over the coming days and weeks, we're going to look to position ourselves in the TBT, Tomboy Tom, which is bearish the bond market. So we thought we would just mention that to you right here at the offshoot of our nightly update here and just make you aware of that. So why don't we go ahead and take a look at a couple of charts that we have set up here for the night. And we're going to take a look at the Dow Jones Transportation on a 6-month chart here, and we're going to look at the Dow Jones Industrial Average on a 6-month. And we want to keep our eye on the lows of 2909 for warning signs on the Dow Transports. As you can see, they come in right down here. If we start taking out the 2909 level on the Dow Transports, then we would probably have to look for the same thing to happen on the Dow, take out its 7450 level, or at least that would be a signal of things to come in the Dow Jones average. So let's just, even though we rallied today 279 points, we're still cautious the market. We still think over a period of time that this 74.49 area gets revisited. If not, that's fine. We're going to trade the markets as we see them. We want to take a look at a stock that not only do we like as an investment, but we like from a swing trade standpoint, and we're going to take a look at the letter K, Kellogg's. And let's take a look at Kellogg's on a 6-month daily chart. And we're going to enter this stock here on a swing trade at 45.70. 45.70 is our trigger price, which comes in right up here today, which is yesterday's high. And as you can see today, we got up to a high price level of 45.41, and we have yet to be triggered on this trade. But this is going to be a stock we look to get long on a trigger of 45.70 for a swing trade. We think there's going to be upside in front of the February 5th earnings that are coming out, and the rationale behind us wanting to get long the stock is on January 16th. There were 2 upgrades. Targets were raised 20% higher than the current level of the stock. They were raised into the 52, 53 area. The stock is putting in higher highs and higher lows. We see it, which constitutes a very constructive pattern. Quarter 1 should be materially better, and margins should improve, and Kellogg should actually benefit from a recession as people will eat at home more, and that fits right in with their market. So as we can see here, we've got continued higher lows on the stock, and we have slightly higher highs on the stock. So this is a real nice pattern on Kellogg's. We're hesitant to necessarily buy this. Let's say if we get triggered tomorrow, we're hesitant to maybe buy tomorrow only because we're starting to get a little bit into the overbought. I mean, we're still in the neutral territory, but we're fast approaching the 70 mark on the RSI. And if we now take a look at another chart on Kellogg's, this here will illustrate the stochastics on it. So we're getting a little bit up into the overbought zone, but we're going to go with the trigger at 45.70 if we get triggered, and we're going to get long that on a swing trade. So put that on your radar, put that on your alerts at 45.70 to get long Kellogg's. The next thing we want to take a look at is Apollo, and we had talked about Apollo Group, which is in the education industry, a couple days back. And if we take a look what happened to Apollo today, the stock got slammed. It rallied back. It closed down slightly over $1, but again, let's just take a look at what we identified here and why we entered into this trade. Despite the market being up today 279 points, we had Apollo down on the day. And again, let's just review what we saw here. We saw the stock was becoming overbought on stochastics, as we can see illustrated here. We saw that we had a little bit of a gap still existing here from a week and a half ago, which was not really a big deal. But what we have over here on the right side of the charts is we have the stock making a higher high the last couple of days. And on these last couple of days, it continued to trade lower volume, as you can see here. The volume started to decrease on rallies, and we were aware of that, so we decided to get short. Also, we had an RSI rolling over. As you can see, the RSI never confirmed as the stock made higher highs, so we decided to get short the stock, and it worked out well for us yesterday, and we went ahead and got short the stock again today into strength, and we closed out the position, and we netted, I think, almost nearly 4 points on the trade. I think it was 4 points exactly. So these are just the kind of things that you have to look for in identifying when to get short certain stocks. Even despite the market backdrop being positive today, the stock closed down. So we wanted to just revisit this here and kind of talk about the technical aspect of it and what you need to look for in trying to identify spots to short. And let's kind of go back over then what we did today as far as our trading for the day. Today's trading recap, we shorted potash at 60. Let's get this out of here. We got this note keep showing up. As you can see where I've got my pointer, we shorted potash at 68.40. We covered at 67 for a 140 gain. We shorted MasterCard at 128.12, covered at 126 for a 2.12 gain. And we shorted Apollo, as we talked about, at 87.46 and covered at 83.40 into the plunge for a $4.06 gain. So these were our day trades that we had for the day, and they were all on the short side. And we shorted when the market was up over 100 points early in the day. We covered when we started retreating back towards the unchanged level. And on Apollo, we stayed short the stock because we had identified on the charts. And let's go back to Apollo. We had looked at the charts, and we had thought once it broke this 84.56 level that we would get a new wave of selling in the stock, and we did. And the stock actually got down all the way to 82.96. So we had thought the stock could break the support level here, break below it, and into that plunge down, we decided to cover, get out, and take a very, very nice trade on the Apollo short. And one thing I guess I will mention is, you know, Obama is now our president, President Obama, and with the country facing such worsening economic crisis, it's a shame that now President Obama was hoping to win quick approval of his choice, Timothy Geithner, to be our Treasury Secretary. But first now, Geithner is going to have to explain how he missed paying $34,000 in payroll taxes earlier in the decade. So already, you know, it doesn't matter who the president is. It seems like each president has issues, and unfortunately for President Obama, he's got a Treasury Secretary that has some clouds hanging over him already. And one other thing that I will mention, in yesterday's market activity, we had a statement from Professor Nouriel Roubini, a New York University professor, and he actually probably did not help the poor session yesterday, but at a conference in Dubai, the professor said, and let me quote this, the U.S. financial losses may reach 3.6 trillion, that's right, 3.6 trillion with a T as in Tom, suggesting that our banking system is effectively insolvent. So while we had a rally today, we had a rally in the financials, how comfortable does that make you feel when he says that our U.S. financial losses may reach 3.6 trillion, suggesting that our banking system is effectively insolvent? So I don't want to leave you on a bad note there, but just go ahead and stop and think, ponder that thought, and come to whatever conclusions you may, but it's not very sobering to hear something like that. So we'll have to see how the markets continue to respond over the coming days and weeks, and we'll be on the lookout as we are all the time for day trading opportunities and for swing trade opportunities. And the next swing trade opportunity that we have on the radar is to get long Kellogg's on a break above 45.70. That's our trigger price. So put that on your alerts at 45.70, and that's going to be our next swing trade setup that we're looking at. So having said that, we're going to wrap this report up for the evening. We wish you a good evening. We hope to see you tomorrow morning at 8:20. Join us in our trading room. And everyone have a good night, and we'll see you in the morning.